Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hi everyone, my name is Rob Clayton and thank you for joining me. Presently, the Australian dollar is showing a slight display of weakness, pulling away from that key area of 72.60 and finding support around 72.15 as renewed US-Iran tension lift the safe haven demand for the US dollar and keep the Australian dollar tapped to that key level, as I mentioned, of 72.60. In economic data in the US, core CPI rose by 0.4% against forecasts of 0.3, marking it the highest level since January 2025, while headline CPI held at 0.6%, lifting annual inflation to 3.8%, the highest since May 2023, as elevated oil prices continue to feed into broader inflation pressure. The focus now shifts on the US PPI data and also keep an eye on Trump meeting with Chinese President in Beijing, with markets looking for fresh direction on inflation and Fed expectations and also any outcome on the Middle East conflict. Meanwhile, the RBA's hawkish stance may also help limit downside pressure as the Aussie is still finding support there. Overall, though, the technicals have broken down. I'm still in a bit of a bear camp here as the market can't or doesn't appear to be able to break above that 72.60 and therefore looking for a pullback somewhere a little bit deeper than 72.15 to 71.65. Turning to the euro, the cap around 118.30.35 still appears to be intact, as we can see here, after at least 5 attempts fail, and the market is actually breaking down and looking towards that support area of 116.85 or a little bit deeper, I feel, if stops trigger to 116.30.35, and maybe expect to see a recovery and retest that top side of 118. Turning to dollar yen, the market has nudged higher into the third consecutive session, and as we see here, it's still a little bit nervous as we get closer towards the suspected intervention risks. That is anywhere towards 157.5 to 158. As you can see, this candle is very heavy, and I'm surprised the market still wants to continue on, as it will no doubt run into heavy supply and maybe see another down test and look towards 155 as initial target. Turning to sterling, where the market was also weaker, backing away from that 136 and now looking towards, I feel, as a potential target of 134.5 and reassess from there. Commodities, although I have been somewhat neutral, there is a negative candle in place here, or an engulfing candle, that could see a little bit of weakness and drop back towards the bottom side of 4,680. But from there, I feel the market may find again demand and see a recovery, and therefore back towards the highs somewhere of 148 and reassess. And oil, well, the market was a little bit firmer, but still finding, as I was saying yesterday, up towards 98 as a potential supply zone, or down towards the 84, 86 area as demand. Other than that, neutral, and I'd rather wait for better opportunities due to the risk of the Middle East really fueling this movement in the oil. That's about. Thank you for joining me. As always, look after the intraday report. Hope you enjoy the great start to the day.